Morning, Patreon subscribers. So hopefully you're doing okay. Do note that the trade recommendations are just observations today because we've got FOMC tomorrow. And yesterday's trade of the day was the Kiwi CAD. It triggered around about here. We made 41 pips. It has continued quite heavily since, so we could have kept it on overnight. But we really don't know with 100% certainty what the herd are going to do. We know fairly confidently they're going to hold on to losses, but they can reverse. So it looks in this case that they did hold on to their losses, and they are currently long on the Kiwi and they're short the CAD. Do bear in mind we've got the inflation rate from the Bank of Canada later, and here's the logic for that signal. There's the New Zealand dollar, there's the CAD. So they're shorting the CAD and they're long the Kiwi. What happens to price? Down we come. Okay, so that's how you can use the sheet. And we did okay. 41 pips is all right. I'm quite happy. Even if we don't have any more trade of the days this week, 41 pips is fine. I'm quite happy with that. It's certainly a positive result, and it might continue. Do note that we've got a little bit of support down here. We've got a demand area, so we might come down to 84.17, which is less than 50 pips away. That might hold. Okay, so do bear in mind, and we've got the inflation data out as well. So that's quite happy. I'm quite happy with that. That's quite cool. Aussie USD weekly open. So we're fairly bearish below to target maybe ATR target short. It's a long way. If you're looking for a place in an order, it might be better to place an order here to go long. But like I said at the very beginning of the video, these aren't going to be recommendations to enter because it's just gonna really move tomorrow, probably to the downside. It all depends on what Powell says. So we've got a potential scenario of triggering that, and a potential scenario of getting the SLC. If we're above the weekly open, it's going to be fairly likely, I think, and that would be a decent idea. If you place an order, just make sure your stop's tight. The trouble is the FOMC, it might stop you out. It might really move and come down, then move like that. So you might get stopped out. Just be really careful. And there's your weekly open level, 67.06. So you could probably wait for the press conference, wait for the things to settle, and then you can use your weekly open for, as a line in the sand. There's your daily open as well. The weekly open is obviously a little bit stronger. So that's AU. So we are kind of consolidating a little bit, and you can see how we've got resistance over here as well. Oops, click off that maybe. Escape. Oh God. Yeah, so we have got obviously strong resistance. Can you see here? And we're obviously going to create a big supply box here. We're in that chart, aren't we? So definitely careful with AU. We'll look at NU because obviously the bubble location, and I guess we can keep it short, really, can't we? We don't really need to make it a long video. Oh, we've exceeded. Okay, right. So you could potentially wait for the SLC to be probed, then look for a long, and then what will happen here is that once we've got that stop loss cluster, this bubble's going to be moving that way. So this is the extreme stop hunt area. This is the extreme stop hunt area. So euro might come down, and then we'll be entering stop, liquidity probe and reversal for Kiwi and euro potentially. So that's what will happen, I think. So we might come down just to raid the stops, and then that bubble will move, and then it will be a buy above the ATR target for a short. So there's your weekly open to ATR target move, which is 86 pips. So technically, job done. Might want to get that, and then sentimentally, the job done, just because it wants to probe and hound and harass the retail traders. So it might want to come down there, look for a long, target look weekly open. So that's a potential scenario, and obviously keep an eye on that New Zealand dollar bubble. If we do come down to 61.74, which is less than 20 pips away, that bubble will be moving. And I guess we'll just keep it short, like I say. And Dollar Swiss, we're above 50%, very sideways. We're just ranging, aren't we? That high and that low. The sideways chop. Monthly pivot though, we might bounce around a monthly pivot potentially. One above is at 93.20, one below is at 92.35. So you could look for a weekly open to SLC. I don't know why it does that. I click my mouse button in, moves the chart. That's probably not worth doing, is it really? The risks to reward wouldn't be that good, but it might be a fairly likely trade. You know, if you're not looking for a home run, it's not really worth doing. There's like 12, 15 pips. You can see those stops there. Why there, I wonder? It's so weird, isn't it? Obviously, they're looking at that, I suppose. Why would they all congregate their stops at that point? Doesn't make any sense, does it? I guess it's just because it's below those lows. And then they might move their stops lower, potentially. That's just nuts. So, yeah, I think might be likely. So look for a weekly open breach to SLC. And don't forget, we're below monthly pivot and we're above 50% on the sentiment. So that's fairly bearish because we've got that technical resistance, and then this is a sell because we're above 50%. I guess we can look at dollar yen, and then we'll just close. I'm quite looking forward to the FOMC tomorrow. It's going to be quite interesting. Oh yeah, we need to remove the fib, don't we? We had an entry here. This was the stop loss cluster probe, and we had a really wide stop, didn't we? And then it did fall. The most we got from that trade, yeah, it was a 5R. It was more than a 5R entry, stop loss. Yeah, so it was a good trade. But we'll remove the fib now, and then we're going to look at these after the FOMC. So that was the entry, that was the stop, and we got to a 5R, which is really good. One above, 135.20, one below is close, 131.95. Very wide, very crazy. That's a hugely wide difference, 325 pips. Yeah, potentially target HR, target long, because the monthly pivot resistance is a double confluence. So if price does navigate around here, you can definitely use this as a fairly decent resistance area to trade off, where you could have that as your entry and that as your stop, really tight. Like, you know, you could make it 20 pips, and then you know you can get an excellent risk reward there using your monthly pivot and HR target long. So keep an eye on 133.64, 133.74 for dollar yen. And like I say, this is going to be moving a hell of a lot tomorrow, so it might well pump, but then you're looking for a short potentially, as long as these two hold. Okay.